All right. Recording is rolling. I appreciate everybody who's joining. I'm going to go ahead and get this started now. Um, Today is Tuesday, June 13th, 2023. We're going to talk about a previous week sentiment. This is something I do with my personal Discord every time. I look to tell them how I approach the markets, what I'm looking for the week, as well as what had happened last week. This helps me and helps them start to understand a feeling of where we are moving in the market during that certain week, right? Where is the bias? Is it bullish or bearish? And where can we start to pull our analysis from that, right? So we're going to talk about the previous week, which I have here marked in these two lines, and then we will talk about this week, what's happening right now, and what we are looking for. So always, if you guys don't know me, I am Flo. I like to look for my higher time frames to lower time frames from an institutional analysis perspective. We will go deeper into that as we get farther into these series, but for now, we're going to just run a weekly sentiment. So last week, let's talk about what had happened on the higher time frames. This is a 4-hour chart now. I'm going to go ahead and go to a daily chart. So here on the daily chart, at this point in time when we had started the week, if we're looking at price at these areas, right, without all of these candles to the right here, don't worry about that. We're just looking at this black candle and this candle right here. What does this tell us, right? From a higher time frame perspective, we had a previous demand right here. We had a break of structure to the upside from a previous high that had caused a low with imbalance that left that area of displacement, right? And then we saw that dip into that area of displacement, the creation of new demand, and then from that, the continuation into the overall high. If we look at this, we can see it's just a higher time frame, higher low, meaning this low here caused a new high. All we did was liquidate previous demand, create new demand, create another high, and then again create another higher low. We can see us manipulating lows, what I have drawn in red right here, showing that liquidity buildup of longs, right? And then we can see us leaving highs, those equal highs that are showing the shorts that are continuing to try to predict tops over and over while we are showing that bullish nature and that bullish continuation overall. So that is the daily chart. We can see that push to the upside right there. So I tell myself, I say, hey, we're looking for price to come down into this area. We can look for a 4-hour break of structure to the upside to confirm our higher low. And from that, we can look to take it higher into the overall week high. So if I go ahead and go to the 4-hour now, we take a look at the 4-hour within this area, this pullback right here. We say where are our highs and lows? When do we introduce demand, right? Once we start to come down and we fill that area of imbalance, we can see how price creates a high right here, a low, a high, and then we get a higher low. This is where it starts to become important. If we now get another higher high and then a higher low and a new high, that puts in our trend reversal from bearish to bullish and then confirming our higher low from a daily to now 4-hour chart. And we're able to then take advantage of it that way and see that we are now within that daily swing, right? And not just playing that intraday, whatever the TP is as far as what you're looking for. But we wait for that higher high, higher low, and then that new high to be created. Once that is shown, we have that area of demand that we can see right here. High, higher low, higher high comes into that candle before candle, what I look to take advantage of. And then from that, we see that continuation all the way into these highs. Something that I want to kind of emphasize as far as manipulation goes. What I really, really push out to my students and those in the private community is constant continuation. Look for what price is doing now and don't try to predict, meaning everybody who was looking to the left here was saying, look at this high, it caused this low, big black candles, look at the imbalances, right? Look at all this space. It's going to come up, it's going to do the same thing, and it's going to continue to the downside, right? That's what they're looking at right now. We saw the introduction of demand from the daily to the 4-hour telling us that we're still going to continue to the upside. We're still bullish over here, still creating higher highs and higher lows. Now that we saw that, we are now able to say, okay, let's just continue to look for our area of demand. Where's our next higher low to take it to the upside, right? Versus going over here saying which candle is going to be the candle it reverses off of and trying to short it once it comes up to that area. Because what happens once they do that? They short it. They don't want to be wrong, remember? So once they short it in their area, where do they place their stop loss? At this high right here. Why? Because they don't want to be wrong. They want to be right and they want to catch that move to the downside because that's what it did over here previously. But we have to remember this is all old money. This is not what is happening right now in the market. People are buying and selling right now in the market. This is what is happening over here, the right side of the chart. I really, really like to emphasize that as far as your analysis, because constantly focusing on the right side of the chart is going to elevate your learning game, help you gain experience, and help you gain that confidence because now you're watching it, right? You're watching it form. You're not just predicting a zone, a candle, or something like that to try to take it off of. And from that, right, you see continuation, 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 right? All the available entries that are given on a bullish perspective versus trying to catch these tops right here, right? Trying to catch the top, trying to catch the top. Okay, it rated this high, so there must be a top right here, right? But it's constantly just breaking structure, candle before candle, breaking structure, candle before candle, again, breaking structure, right? And then we have the areas of demand, again, continuation to the upside. And what do we see? Constant bullishness, right? There's no bearishness, and I talk about the disapproval theory a lot as well until it is there. That is as simple as it is. I like to talk about patience and how that can be the most, I would say, the most important factor to trading. And why I say that is because with patience, you can allow yourself to not have to guess at all. Meaning, in this scenario, I talk about the disapproval theory, meaning if I were to continuously look for my areas of demand, we had an area of demand, another higher low, right? So I look for my next area of demand. It comes into that area of demand and then it disproves me. I get a displacement break through my area of demand. What does that show? That we created supply. We now have the ability to seek lower, right? To take out all of those late longs in this case. And then once we do, we take out those previous longs, right? Then we look for that continuation to the upside. If it shows us this here, if it shows us that break of structure for that higher low, then we're able to take that higher into that weak high. If it doesn't, and instead it breaks down, then we look for the raid to the upside into previous supply. Again, IC, MLC, and then the continuation to the downside overall. This allows us to not have to guess, right? We're just looking at what is happening right now. We're looking at what happened on the right side of the chart at this point in time. What happened here? Continuation to the upside. No matter how many times you sit here, look over here, and try to guess, or how the candles look within these areas, right? This is a 4-hour chart. We have to remember, even within here, we got 12 hours of literal choppy price action with people, looking at this saying it's going to drop. It has to drop because look, it's gone up for so long. It's been 2 weeks, right, of just straight up. So it has to come down at some point, right? They're telling themselves all of these things to try to predict, when in reality, it's bullish on higher time frames. So we'll continue to look for that area of demand and the continuation overall. As far as previous week, I think it was a beautiful, beautiful week to be into the markets as it was literally just a higher low. We got that break with displacement here. It came into that candle before candle, that demand zone that we look for. And then we got that higher low, higher high, showing us that next area of demand for the overall continuation. Thursdays are usually my best days. And the reason I say that is because Thursdays will show that full trend, pretty much obvious at that point where it's at, what it's doing later in the week. I'll wait for Wednesday to either show the reversal or show the full continuation. And then Thursday is just going to be pure continuation into Friday. So that just allows me to wait for what's obvious, not have to guess. And then once it's right there, right in my face, right? Take the trade, don't change anything. And then from that, you get that full continuation to the upside, right? Into the next week and continuing, continuing, continuing. Because we look here and we say, oh, there's imbalances, there's this, there's that, there's this, right? But we have to remember right now, we're creating demand. We're still creating higher lows. So until we create that lower low and that lower high and then another new low that shows us that reversal, then we're not going to look for any areas of supply or any tops at this point in time, right? Or any targets to the downside. We're just going to continue to look for the next week high, the next area of buy side liquidity. And then from that, right, you can see that full continuation. Um, I mean, look at here, right? Even from a manipulation perspective of you looking at the charts, right? You see this and you see these lines, right? You see these trend lines and you tell yourself it's got to break this at some point, or when it does break it, right? You short it, because when it breaks it, you say it's going to retest and then I have to short it to the downside. And everybody who's trying to predict that downside move is the reason that price is continuing to the upside. That is simply how the market works. So if instead we tell ourselves, hey, I don't have to predict, instead, what is price doing right now? And we say, okay, in the higher time frames, it's bullish. On my 4 hour, it's tapped into my candle before candle, my demand zone, and then it's created a higher high, a higher low, and another new high, telling me that we're creating more demand. I have my area to look for, right? And then once I am in at that area, what are we targeting? The week high, and then that overall buy side liquidity target, right? Because this allows you to not have to be right. This is allows you to play what is already there. It is already showing you it's bullish. It's already showing you that it's creating new highs. All you're doing is playing what is already there. So if instead you get into a situation like this, where you look to play the next higher low, and then price comes up and displaces through your zone, that's okay, because now you've just learned the reversal of the trend, right? You've learned what price is doing at that point in time versus trying to predict based on something that had happened a year ago, a couple months ago, whatever it is, right? We're worried about the new money. We're worried about the new supply and demand that is coming into the market to allow us to get into those entries that the quote unquote algorithms, right? Your institutions are taking advantage of. So if we wait for them, hey, this is a huge candle, right? With imbalance that broke structure. It closed over a previous high. So obviously, we are looking for what had started that. What had started that was this area here, that candle before candle. That shows us that institutional liquidity, right? The composite operator has pushed price up right here. They have entered within this area. So we look to capitalize when it comes back to that area here. All they did was push price up, begin to take profits, bring it back to their break even, and then enter again, right? We have to understand that mindset of them being greedy. Um, they're constantly manipulating price to bring it back to break even, and they are hedging because they don't have a buyer for their seller. And we'll talk about that in a little bit as well. But just understanding that this continuation mindset is going to be what brings you to that next level of understanding what bias you're in for the day, and not trying to predict and not trying to pick a zone or pick a limit or pick anything like that. Instead, you're playing what's there. That's going to bring you to that next level. You now have that area of repetition, because now that you have found that understanding of theory, right? And you're not just looking for a pattern or a strategy. Instead, you're looking at what the market is doing and what it's showing you based on data. That's going to allow you to get into those trades to where you understand where it's going to go, why it's going to go to those places. And if it doesn't, then you understand what it could do as well, right? Like literally how I trade is I look at this. Let's say I came in on Thursday, right? I trade from 9 to 12. So I find entries around 9:30 to 10:30 are going to be around the best for me personally. I have seen just based on data, but we get this break of structure to the upside. I come to the charts. It's 10 o'clock, right? I come to the charts on Thursday. I can see that push to the upside. Okay, that's what it's showing me. It's showing me a new high is being created. So now I can just look for the higher low coming into Friday, right? We come into Friday, 10 o'clock hits. We get that break to the upside, which is into demand again, and then continues, right? Through the weekend and then into this week as well. Still showing higher lows and higher highs. So why would I look for anything different until it shows me that? That's it, right? Keep it as simple as possible. When people were shorting down here, this is a very, very good one. And I'll show the weekly chart here in a second. Let me go ahead and get rid of these. I am recording this. This will be posted to YouTube after, for anyone who wants to go back, check that out. I will link you guys for that as well. But let me go to a weekly chart here. and we'll talk about what had happened. So your higher time frames are literally they're the answer to your story. They are the moral of the story. They are where price is going. Your higher time frames tell you where price is going, if it's bullish or bearish. Your lower time frames are going to be the pages that make up that story, okay? All the little things in between. So if we can figure out the moral of the story first, then that allows us to then reverse engineer, right? And get into the lower time frames and wait for those confirmations to occur. And then once they do, we are able to take advantage of that, right? On the weekly chart, we took out a previous area of demand after we created a new high, took it out, and then we broke structure to the upside here. The candle that had pushed into that area of supply that had caused a new low here created that area of imbalance. This was a very good example for the private community as they were able to get into this trade right here as this was posted. And the reason I say this is because this was that creation of demand that pushed us to cause that new high. So we were able to take advantage of that creation of demand. Coming into the next couple weeks, the next couple months, we liquidate that demand and then we create new demand and we continue into the week high. Right? So we can see areas where institutions are constantly bringing price to manipulate traders back to their break evens to take price up or down, right? To constantly capitalize off of that. They push price down, they create all the shorts. Everybody's trying to short to the downside right now. They put all their stop losses above these highs, this high, this high, this high, when in reality, they're just taking it back to their break even to enter again. They now have a bunch of money available and they just push price into those highs. All it is a higher high, higher low, and continuation. Keep it as simple as possible. That's why I talk about trading later in the week. I just like to wait for what's obvious because once you have what's obvious, once that trend is obvious, then you just wait for one of two things, approval or disapproval. Once you have that zone, right, you have that switch, and now you say, okay, I have that zone, that imbalance, my institutional candle in this case. So I'll draw it out like this, the push down. Now I say I'm going to wait for a mitigation, a liquidation, and then a creation. I get a mitigation, push away, a liquidation, and then I wait for that confirmation of that higher low. That tells me, yes, price is now bullish. I'm able to enter the candle before candle now, which is your new creation of demand, and then you get that full continuation. Um, Wyckoff theory is going to be super, super helpful for these. But as far as just understanding how the market is moving, don't try to go in there and say, hey, where's the IC? Where's the MLC? Right? It's not a pattern trading thing. Try to understand why price mitigates in certain areas and why price moves away from certain areas. When you're back testing, this is something I like to tell my students as well. I don't even really back test with replay mode on because it's not realistic. You're looking at hourly candles that
Yes,
form
ma'am.
within
Ashley
hours,
L.
right? Within literal hours, you're looking at days
Student.
of data within minutes, and that's just not realistic. I like to see how the candles form, how they liquidate certain areas, what happens after, right? That's going to allow you to understand why. So when you go back and you back test, just ask yourself why. Why did it create this high, or why did it take out this high after coming to this area here? And you can come back and you can say, okay, this was a liquidation of previous demand, and then we created a new high. So this was new demand, right? We came into that area of demand. So that was the continuation. And this allows you to understand why price moves the way it does, why it manipulates certain areas, and you can start to look for those highs and those lows to be manipulated before you get into your trades. Because at the end of the day, you don't need to guess, right? You don't need to guess those areas. You didn't need to guess these over here. We were just looking for higher lows. Higher time frames was bullish, right? We go to the daily. Let's look at the daily last week. Your previous strong low that caused a new high was here. Okay, so until it's underneath here, I'm just looking for continuation to the upside. This was our most previous area of imbalance. We got that rally. We're looking for a base and another rally. That base is going to be your Wyckoff reaccumulation, which is just going to be that MLC, mitigation, liquidation, creation of new demand for the continuation to the upside. And everybody's trying to predict those shorts while we're just looking for those higher lows, higher lows, higher lows until it doesn't show up, right? So just honestly look for your higher time frames. continue to play that draw on liquidity. If it's still showing you bullishness on the daily time frame, why are you predicting shorts? There's literally no reason to. Because it's going to show you that bullishness until it doesn't. Market structure is your most important way to frame your bias when you are coming into the markets, when you sit down, because without that directional bias, when you get into the charts, without that understanding of where you are even looking for price to go for the day, everything else, personally, I believe is irrelevant because now you're just predicting zones. You're drawing boxes, you're drawing lines, you're hoping it holds that, right? Because you don't know where it's going to go. Instead, if you come into the market, you say, hey, my bias is bullish. We came down, we mitigated this imbalance, so I can look on the H4 now and look for that break of structure to the upside, that higher low and higher high. Okay, we got a higher low. There's a higher high. I have my candle before candle. Let's look for price to play that. Price comes into that area, you have your entry. If it disproves that, then you now have created supply, right? And you can allow your losses to turn into those lessons. And overall, those lessons that you're going to proceed in, you're going to have those losses over and over and over again. But if we can get into this continuation mindset, market is 80% continuation, 20% reversal, right? So if I'm on the right side of the market 80% of the time, the numbers beat it in the long game. I could still lose every single time it reverses, but the numbers guarantee that I will be profitable in the long run. All I have to do is continue to do the same exact thing over and over and over. So that was US 30. That was a previous week review. We're going to talk about what we're looking for this week. Personally, we have a lot of news this week, so I believe it's going to be choppy. We're going to see some liquidations back and forth. This was our previous area of demand. So I was saying if we were to continue bullish, I would look for that mitigation, look for us to take out this low here and creation of demand for continuation to the upside. But again, I'm probably going to be waiting till around Thursday, 10 a.m., maybe even Friday, maybe even next week because of all the red news that we have coming into the week. That's just going to create a bunch of liquidity on both sides. People are going to try to predict at these highs, and it's going to be messy. So I'm waiting for that to be clear, waiting for the imbalance to be shown, that clear area of supply or demand. And from there, we can look to take advantage from that. But yeah, that is my previous week review for US 30. I'm going to go ahead and do ETH now. And then once I am done with ETH, this was a great actually example of the disapproval theory that I was just mentioning. Let's get into ETH here. I think this is the perp chart. Yep. All right. Previous week. Where's Monday here? We'll start with Sunday. Take all of these off if I can. All right. Sunday's here. We'll go throughout the week, and then Friday had ended here with this candle to the downside that we can see here. All right, so understanding our previous week, this was a very, very, I would say, manipulative week. We saw a lot of volatility within the week, and this allowed for a lot of opportunity, right? At first, I was very bullish on ETH. I wanted to take ETH to the upside, into these highs, and actually into these highs over here overall. I had seen a strong low, weak high, and then price was continuing to create higher lows after liquidating trend line liquidity and tapping into areas of institutional candles. But what had happened here and why this was showing that downside move right here and why we were able to capitalize off of this was daily chart. Again, your higher time frames, right? Look at our higher time frames at this point in time. If I'm looking for a continuation to the upside, here's my demand candle, my candle before candle that broke structure to the upside, leaving displacement. So if I wanted to see continuation, I'm looking for a mitigation, liquidation, and creation in this candle, within this area. Look at what we did. Price came down. It did not tap into that area of demand. Instead, it just MLC created internal demand, pushed up, created a lower high, and then we got that break with displacement. There's that strong close underneath that previous area of demand. So what does this tell us? What started that move? This area right here. Now I have an area of supply. Candle before candle that broke structure with displacement. right? I'm just looking at approval or disapproval of each one every time. Price comes into this area, disproves it. What did that? This one. Come back into the candle before candle, capitalize off of that, take it to the downside. Let's look at our 4-hour chart, right? Because at this time, we got this strong push to the upside here, taking out this previous 4-hour internal high. So this told me it could be bullish at this point in time. How we would confirm this is with an hourly breaker structure to the upside after we came into that area of demand. So let's go ahead and look at the hourly chart. What did we end up doing? We pushed to the upside, to the upside, to the upside, left a bunch of lows. We started mitigating, liquidating, and creating supply as we came into this previous high that had caused a new low, as well as that daily candle before candle, that area of supply. We can see one area, right, has multiple confluences from higher time frames to lower time frames. One area shows that imbalance, that raid, and then that break of structure to the downside. Price comes in, mitigates, liquidates, and then creates that area of supply. When we get that first break of structure to the downside here, we look for the lower high, and then we look for that confirmation on the second break. We get the second break when we take out this low here. The candle before candle that had did that was right here. Here's your displacement candle. Here's your candle before candle, your area of supply. Price then pushes away from that, creates that short liquidity for people trying to catch these early shorts, right, after this push down. Once they are taken out of their shorts, they try to long it. We can see all the long liquidity that starts to be built up. As we come into our area of supply, we break another low. We again raid highs right here. After we raid those highs, we create more supply, continuing to just break lows, raid highs, break lows, create supply over and over and over again. We're manipulating highs, leaving lows. Wyckoff theory, super, super, super important as far as how you're going to base your manipulation perspective onto the market, because this is going to allow you to wait and be patient for that liquidation to happen and for that creation to happen, versus trying to predict a Wyckoff scheme, right? Meaning trying to throw labels on it and find the spring or find the UTAD, right? And catch the top or catch the bottom. Because in reality, you don't need to. Once it's already shown and once it's already obvious, the opportunity is there and it's right in your face, right? So all we'd have to do is just approve it or deny it. That's it. Be patient and press buy or sell. That's all we're really doing at the end of the day. So don't try to take it into your own hands, try to do too much and try to predict the market, where it's going to go, why it's going to go to these certain areas. Instead, just wait for that to be shown from the later parts of the week. That's why I personally look for the later parts of the week to trade. And once that is shown, and once you are able to capitalize off of that or learn off of that, that will start to get you in a progressive path. Because if we're going into the markets just trying to trade to make money, or we're going into the markets trying to trade to catch a top or be a celebrity, whatever it is that you're trying to do, you're not trading for the right reasons. If you're trying to go into the market and you're trying to put down a system and repeat the same thing over and over and over again to beat the numbers, then you are, right? You are doing the right thing now because you have a path of progression. You're not just going in there doing random things, trying to do this one day, trying to do this another day. No, you have your path, you have that system, and over time, that will guarantee you profitability. All you have to do is repeat it. All you have to do is follow the rules. That's it. Be disciplined. Be disciplined, be patient enough to wait for that to happen. And then once it happens, capitalize off of that, right? We can see how price just constantly manipulates highs after we have that switch. We get that switch and we see those equal highs that are formed, trend line liquidity. You can call it whatever you want to call it, right? But we're looking at those late shorts that are being that are shorting on this downside move. They're putting their stops over these highs. They get taken out. That manipulates them into going long. And then once they go long, we create supply, right? Again, they're looking for another higher low. We created supply. All we're doing is just pushing back into that area of supply, taking out those late shorts, and then continuing to the downside. Um, Overall, as far as ETH, I am still looking for lower into this weekly low right here. I do believe we can actually tread lower than that. Weekly is bearish, daily is bearish, 4 hours bearish. We can look at this area. I'm looking at this institutional candle currently before we had this push to the upside here. I'll watch for a mitigation liquidation within this area if this was our mitigation, watch for a liquidation, and then price to liquidate that low, create new demand, and continue to the upside if it wants to be bullish. If not, we'll watch for a displacement through that low, and then we can look to take it lower into areas of discount and equal lows. But as far as ETH, I'm bearish. As far as US 30, I'm very bullish. Indices are very bullish to me. NOS, I was looking at NOS earlier too, also very bullish. But again, as far as trading this week, I'm going to be looking for later in the week, Thursday, probably 10 or 10 a.m., and then into the afternoon session as far as that goes. But is there any questions or anything like that that anyone had? If not, that's fine. Feel free to ask them on the YouTube or anything like that. I like to keep these as short as possible because I'm not coming here trying to predict a candle for you guys to buy or sell off of. Instead, I'm just telling you what is happening at the time that it is happening, and what we could possibly do from there. One of two things, right? Buy or sell. What is it going to show? Where is it going to go up? Where is it going to go down? But now that I've got that out there, you guys have seen this. This is what we're going to be starting for Traddoo every single week. I will make a playlist on YouTube for this as well, as this was recorded. But thank you all again to everybody who had joined. If you guys have any questions, feel free to add me, DM me, at me in chat, wherever you guys want to reach me as far as that goes. But thank you guys again. I hope you have a great rest of your day and or night, and I will see you all soon. Peace out, guys.